If you're wondering what your favorite stocks are likely to do this week in the market, then this is the video for you. Don't skip any part of this video because somewhere in it, I'm going to show you how to gauge the market and have a very big upper hand and cheat code advantage for what's likely to happen Monday morning. And you're going to be able to use this strategy tomorrow, Sunday evening, to figure out what is almost surely to take place on Monday morning. We're going to take a look at the VIX. We have a lot of data coming out this week. Jerome Powell speaks on Tuesday. We have existing home sales on Wednesday, which is a lagging indicator of inflation that takes so long to correct. It finally has done so. We're going to see this continues and the economy gets stronger. We also have durable goods. That's coming on later in the week. But we have a lot of earnings going on, which is really affecting the market and the sentiment because there's so much uncertainty. We have earnings on JetBlue, American Airlines. We have Shopify, Tesla, Intel, Starbucks, and Verizon. There's a lot on the table for this week and next week, so let's dive right into this video. Don't skip any part of it. Lots of information here. We're going to be taking a look at the VIX, the SPY. We're going to look at NVIDIA, AMD. We're going to look at Tesla, SoFi, Palantir, and we're going to take a peek at NEO and a few other stocks like Starbucks, American Airlines because of the earnings coming up. We're also going to be taking a look at Intel. So don't skip any part of this video. Let's dive right in right now. Before we get to the VIX here, if you are interested in seeing 5 growth stocks that I have found that are likely to explode, put your comments below right now because I have been gauging the market for new growth opportunities and I have found a bunch. If you guys want to see that video, comment below. And if you also want to see a video and tutorial on Fidelity's Active Trader Pro Beta and the new update with its new features and how to use it and how to set it up, put that comment below as well and I'll make these videos for you. So first, we're looking at the VIX. This is really important. If you're new to the market or don't know where to begin, the VIX is really where I would start. You must understand volatility in the market before you're going to be able to comprehend the proper decisions to make. You have to understand that high volatility means high risk, but not only high risk, high premiums in options. If the volatility is really low, like below 18, then your ability to make high premiums starts to go down. However, not drastically in comparison to the risk to reward ratio between 18 and 20 or higher. So really the sweet spot is between 16 and 18 because the premiums are slightly less. There's less volatility, less IV. Vega affects these options less. And so you make less money on options, but the stability and the overall risk is drastically lower. So it compensates. So your risk to reward is better. Slightly less reward, but drastically lower risk. The sweet spot for trading options for beginners especially is when the VIX is below 18 or below 17. Then everything is very safe, very steady. But for experienced traders like myself, it's a little on the harder side to make premiums and to make consistent income. When the VIX goes below 16, it's considerably harder to make premium. The sweet spot for me, honestly, is between 16 to 18, sometimes even between 18 and 20, especially if you understand how to trade, which stocks to trade, and understand what you're doing or what company you're investing into. We can see for the past month almost, we've been below 18. Very stable, very steady, and peaking up around the 18 and slightly above very, very briefly. But this gap right here, which is very similar to a gap in stocks, shows significant resistance in the VIX, which means volatility will resist heavily in the 1870 range, which is good because we have a very stable market. My custom VIX strategy, which I teach in Discord, is my key levels, which are green at 18. Anything below 18 is green, which means it's fairly safe, pretty consistent, much easier to trade. Premiums are still pretty decent in the 17 to 18 range. Between 18 to 20, you're approaching the yellow zone, which is a warning. This is kind of elevated risk, but also elevated premiums. Between 18 and 20, I make a lot of money because I know which stocks I'm trading, why I'm getting in, why I'm investing, which wheel strategy I'm running. A lot of money to be made. Once you break above 20, between 20 and 25, you approach the orange, which is risk, high risk. When you're between 20 and 25, there's a lot of premium and a lot of volatility. So it's very difficult to trade this range. It takes a lot of experience, but there's a lot of lucrative options here with lots of potential to make profits. But trading the wrong stock, trading the wrong company, doing the wrong things, wrong decisions have pretty big consequences. So you have to be very understanding of how the VIX works. If you're trading a strong company with strong fundamentals and the stocks are dropping, there's a lot of volatility in this range, and you're able to sell put options on a specific stock that's strong and get in a lot lower with premium, as soon as the volatility starts to die off, the stocks will come back up and you'll make a lot of money, but you have to know how to do it. In this range, there are still good opportunities. Once it breaks 25 and it's pushing 30, this is extreme risk. I would not trade anything above 30 on the VIX unless I have high confluence. And there are those times as well. Between 25 and 30, I'm hesitant to trade anything. When the VIX was between 25 and 30, I was trading Palantir and I was making certain trades on Tesla. These stocks are kind of independent because they don't quite follow the market the same way. When the VIX was up here and the market was crashing, Palantir wasn't, and Tesla was kind of doing its own thing, because when the market was flying back in November on the election, Tesla was dropping. So Tesla and Palantir have a pretty decent history of doing whatever they want regardless of the market. So with the VIX being this high, if Tesla is showing strong support and so is Palantir, you can make good money on those stocks specifically, even with the VIX this high, and you'll typically make about 30 to 40% or more on these options versus being in here, or maybe even double what they would be in the 16 to 18 range. However, when the VIX gets above 30, I don't really trade anything ever. I've traded like maybe once or twice above 30 in the past few years. It was on nvda and Tesla back in 2021, 2022. I was making ridiculous premiums while the stock market was coming down, but anything above 30 is basically a casino, in my opinion. No matter how good you are, it's still a casino. I prefer trading between 18 and 20. In between green and yellow, there's lots of premium, elevated risk, but still pretty safe. Below 20, the VIX is not that crazy. And if you know what you're doing, it's good. Between 20 and 25, like I said, you have to be very experienced. 25 to 30 is very elevated risk, and I wouldn't trade above 30. I wouldn't trade anything. So I personally like between 18 and 20 sometimes, and below 18 is very safe. Just want to give you guys that analogy of the VIX. So you see how during the tariff talk, it spiked, consolidated, we got desensitized. We realized the tariff situation, although it was very new at the time, not that heavy in the risk, because things started working out. It wasn't as bad as thought. So it started to drop down, gap down to 18. It stayed between 18 and 20, elevated again. It stayed there for about a month, and then it dove down below 18 and stayed there. And so we're due for a spike. So we could realistically the next month or so have a nice spike up into the 21 range and dip. Volatility spikes happen multiple times a year. Based on this chart, we're looking like a potential, very potential spike could happen somewhere in the middle to end of August or September. Somewhere in here we could have like a little bit of a spike, and that could happen with tariffs. It could happen with the interest rates not getting cut, but I don't see that going on much longer. So I think that's going to be good. I want to give you guys an overview of VIX. We have Jerome Powell speaking on the interest rate cuts this week. We also have existing home sales, and we have durable goods. These are very important indicators, especially existing home sales. If we beat that, it shows inflation dropping. It's a lagging indicator. Home sales is a lagging indicator, and it can hold data down. You can have an economy that is got an inflation rate of 2.0, which is great. It's what the feds want. But if existing home sales is still lagging, which it usually is almost all the time, in fact, it always is, and it's still at a number which is inflationary, it is going to cause the overall inflation number to be higher. So we might have an inflation number of 2.5, but the actual inflation outside of existing home sales might be 2 or 2.2, which is really good. The problem is home sales and new housing starts and building permit, along with existing home sales and homeowners insurance and auto insurance, these are lagging indicators that are almost always 1 to 2 years behind, typically 12 months lagging indicator. The data we're getting on them now was from last year because they're lagging, not really from last year, but they could be as far back as 6 to 12 months, meaning the numbers we're getting now have been going on all year. So if we beat the forecast, inflation is going to drop. We're going to get interest rate cuts, but this is really data from 6 months to a year ago. So this is where we were a year ago on existing home sales, new building permits, housing starts, and the Consumer Michigan panel and the sentiments. When you understand how all of this works, it gives you a lot more confluence and understanding of the market. But understand inflation is not bad for the stock market. In fact, inflation is good for the stock market. The stock market was intended to combat inflation. It's the recession or the likelihood of a recession you have to worry about. But inflation, if it rises, is a tool that you utilize to combat recession, which is what the Feds do. If all of this is confusing and you're like, oh my God, Corey, what are you talking about? This is all confusing. I teach this in my Discord. If you're new to the market, maybe you're having trouble understanding this, I would love to help you and open your eyes to what's actually going on in the stock market. You have it all wrong. Whatever you think about the market, it's wrong. This market was designed to take your money. It's all based on psychology, sentiment, and lagging indicators. And it's all a chess game. Don't hesitate. Don't put off anything for today, for tomorrow, because when you do that, other people have put off yesterday for today, and you're still behind. Don't hesitate. Link to join the Discord and get started is below. Let me turn your losses into wins so you can make the profits like you're seeing on the screen right now. I have students that started with $7,000, turned it into $15,000 in 3 months. Other students that had $30,000 turned it into $60,000 in 3 to 4 months. And I have students that have made $200,000 or $300,000 in several months. My students are profitable. They're making money because I'm the real trader in the Discord. I don't pay coaches. I don't pay other people. When you join my Discord, I coach you. I teach you. You copy my trades. You copy my formula so you can be successful. I look forward to seeing you very soon. So we have Intel earnings coming up on July 24th, which is this Thursday. And I put out a trade in Discord for Intel as well. And I believe that Intel is going to beat earnings. I'm not sure if they're going to necessarily crush, but I do feel based on the most recent news and the updates that Intel has been giving based on the previous earnings and the guidance they had given us that they are going to meet or beat this earnings. And that is good because that will see Intel very likely based on technical analysis and based on the sentiment of this stock. When you have a stock beaten up like this, everybody's waiting for something before they get back in. You have to remember the market is psychology. It's all psychological. On the worst guidance they had given back in July of last year, the stock dropped. A lot of people sold along here. There's a lot of slippage. And what I mean by that is people were selling. And when they were doing this, people were getting stopped out and margin called, and it was just slipping down. A lot of people lost money along the way here, which means anybody holding down here is not going to sell until it gets above 31. A lot of people that were selling between 30 and 20 in this $10 range, all the people that sold, especially all the people that bought right up here, aren't going to sell until the stock gets up to 30 or 32. And all the people that lost money, all the traders, investors that lost money in between 20 and 30 that were selling in here are going to wait for the stock to start going back up. And all the investors that sold and lost money in here ended up buying down here, a lot of them. And when the stock runs, they'll probably sell up here. So there's a ceiling of 31. Anyone who held through here is also going to hold. People that sold out along here that didn't buy it down here as it comes up will also buy it. It's a very psychological thing. In order to break this barrier of sell-off, we have to overcome what caused it. And all of the negative guidance that happened back here, they're gradually getting better. New CEO, better direction, more competitive nature from within the company. So if this earnings is good and Intel meets or beats this expectation, well, then it's going to depend on their future guidance, which if that's also good and they have elevated guidance with increased profits, this is going to turn around some of the negative sentiment from here. If over here on the earnings coming up, we start to rectify these issues, as they get rectified, then we start to reverse back up into this range. So this earnings and the next earnings, as long as Intel keeps doing what they're doing and they're progressing into profitability and increased profits, they're going to push through into this range. So if this earnings is good, I would not be surprised to see Intel rising in the $25 to $28 range. But this is dependent on beating earnings, which I think they will based on the technical analysis and based on the guidance they gave us and based on the numbers we've seen previously. And the expectations are there. Doesn't mean it's guaranteed, but it is likely. And the bottom for Intel is 20. So I was selling $21, $22, and $23 puts for the past 2 or 3 months. I've collected lots of premium And so at this point in time, I am okay with owning the shares because I'll have a lower average cost anyway. And the stock, based on their current valuation, based on their potential growth, based on their price to sales, which gauges their potential to have profits down the road or make profits and grow, is great. We have a market cap of 100 billion and we have a trailing 12 month of 53 billion, giving them a price to sales of 2. When SoFi had a price to sales of 2, this is back when the stock was $5 and they ran all the way to 18. This is like a 3-4x return. So Intel could very well see a 3 to 4x return. A 3x return puts it at 60 where it was quite a while ago, a couple of years back, but it very well could go back to there. With a price to sales of 2, realistically, if they get to where they should be, closer to AMD or exceeding AMD, somewhere in that neighborhood of profitability and growth and consistency and market share, this stock is easily 2 to 3x in the next year or two. So there's risk here. There's inherent risk. Will this happen? We don't know, but it's likely because they're an American company. This administration backs American companies, and this is the only American tech company that builds its own chips here. They're expanding new factories, new deals, new CEO, very strong, and at the current price, could never pass it up. I don't see it really going much below 20, definitely not below 20 in the long term. I just don't see that happening. Verizon's earnings are also coming up. All of this sell-off really happened because of the dividends. There's more sell-off because of the market sentiment, but Verizon also has some updated news that has come out recently, and they had their contracts renewed. You can see, I believe it was right here, maybe. So Verizon is keeping its contracts. It's not losing them. They are lagging behind T-Mobile on certain aspects, but overall there is a carrier war between T-Mobile, Verizon, AT&T, but Verizon is very strong earnings, 172 billion market cap. When we go to financials, we divide 135 and 172. We have a price to sales of virtually 1. There is easy a 6 to 10x on the table for Verizon in the coming 5 to 10 years. I think long-term, Verizon is a no-brainer, and at the current price of $40 is good, unless they miss earnings. That would be terrible, but this stock is worth $40. It's worth more than $40, and the one-year price target is almost $50. It's like $48. So very strong, and I have no reason in my mind to worry or fear Verizon long-term. I would hold this stock, and I would continue to add to it, especially because it's a safe stock and one that you will want to have in your portfolio long-term. Starbucks has earnings coming up on July 29th. They missed the previous earnings. I would be hesitant on Starbucks right now. I typically sell put options, but I have waited to see how things go over the next week during the lead up to earnings. I may sell some put options this week. I've been selling steady put options every week or two on Starbucks between 89 and 91. Lots of strong support down here. And I'm able to generate anywhere between $1,500 to $2,000 a month just trading small positions in Starbucks. This is a very safe stock, in my opinion, long term. New CEO come over from Chipotle and has really helped to turn things around slowly but surely. It's a dividend stock. It has lower volatility. I have my eye on this earnings. Very, very tight earnings coming up, in my opinion. If they beat earnings and the guidance is good, then Starbucks has the potential and very likelihood that it'll start trekking up into the 102 to 105 range. In my honest opinion, based on this company, the technical analysis, and the overall fundamentals and the financials, and the ability that Starbucks potentially has to expand through China with this sale and everything else going on with the new CEO, Starbucks in the next 2 to 3 years could very easily be $130, $140 stock or more. But you also have the ability to sell covered calls, sell put options, collect dividends. Starbucks, very strong, but there's a lot going on with this earnings. We also have dividends coming up on August 15th. I would not be selling covered calls during dividends. For the next month, I wouldn't touch covered calls on Starbucks at all. You could, it's not safe. And particularly after earnings, the first week of August, once it settles down, even if it drops on a bad earnings, you could go below that and sell 20 delta puts, because during dividends, the stock always rebound back up for dividends. So typically during dividends, I sell put options almost every time, very few times, almost every time selling put options on a stock the week or two leading up to dividends. Very few times do I ever get assigned. We're talking like maybe once out of 20 or 30 different times where I sell put options, I might get a sign. And sometimes it doesn't even happen. Overall, though, since I've been trading, this has happened maybe 5 or 6 times out of the hundreds and hundreds and hundreds of times that I've sold put options in the week of dividends. It just doesn't happen because during dividends, people buy in to get the dividend. So you sell a put, the stock runs, you get out at a profit. It's a strategy I always run, something you guys could think about for Starbucks. Shopify also has earnings coming up in a couple of weeks, something else to look at, although it's not really for this week. It is just running like crazy. I have trades I've put in the Discord every single week, selling put options for 111, 112, even 113 and 114. I've made close to $2,000 in the last month just on put options premium on Shopify. This is another strong stock. In my honest opinion, I'm likely to put out trades in my Discord for selling put options on Shopify going into earnings at a higher strike than one would think, probably in the mid-teens or higher. This is a stock that is potentially going to grow into the $200 range in the coming year or two. All the products that I've ordered over the past few months that are not on Amazon end up being with Shopify. Shopify is a platform to sell their products as a storefront. They all integrate. It's all integrated. So you get Shopify points. It integrates your credit card and your personal information. So if you're at 2 or 3 different stores that use Shopify, all your information is stored essentially just like Amazon. But Shopify has its own perks, and the way they do things is very good. It gets you off of this eBay, Amazon, one-stop shop type platform and allows independent stores to operate. It integrates them together. It's a lot different of an e-commerce, and in my opinion, it's very, very powerful. This is a stock and a company that is going to do well. This is a stock and a company that's going to do very well long-term, in my opinion. When we look at market cap of $164 billion, and then we go into financials trailing 12 month of 9, it is on the higher side because the price to sales is going to be about 16, but in retail space, 16 is pretty good. There are many other retail chains that are a lot higher. In my opinion, like I said, based on the financials and their growth, they have a lot of potential to achieve 200 in the coming year or two. So there is a nice return on the table with Shopify. Tesla has earnings this week as well. So if you're looking at getting into Tesla, I'd be very careful because Tesla has missed most of its earnings. It doesn't mean it's going to miss this time, but they've missed a lot. And if they miss this earnings and the guidance isn't good or the data is just upsetting, this stock could very easily dip right back down into $190 to $200. It could happen. In my opinion, it's more likely to hit 250 to 260. Somewhere in the 250 to 260 range is very possible. But if they meet the expectation or beat it, and or their guidance for the future is really strong, and 390 to 400 is very likely if they meet the guidance or beat it and have future guidance that is very strong. So there's a lot of swing here. You have to be very careful at Tesla. It could go as low as 250 or worse, or it could go as high as 400. It's all based on expectation. We're having an expectation right now of 40 cents. If it's worse than that and future guidance is bad, then there's all kinds of problems in this stock. So be very, very careful. If you look at all the previous earnings, Tesla has only beat earnings 5 times out of the past 11 times. So they only beat earnings half the time. Like if you look at the past 8 earnings, they've only beat twice. Out of the past 2 years, they've only beat twice. So we have to be very careful. But in my opinion, right now, it's really volatile. However, based on the numbers I've looked at and their growth and what Elon Musk has said, they are very likely to beat this time. But be very careful because Tesla is the volatility king. I've seen this stock beat earnings and only go up a little bit. I've seen it miss earnings badly and run like crazy. I've also seen this stock and others do very well and tank. So you have to be cautious with Tesla. Stick around because I'm going to show you how to gauge the market Monday morning and have a very strong confluence, almost 100% accurate of what's likely to happen Monday morning. And you can do this Sunday evening. Stick around because I'm going to show you that. If all of this is confusing you and you really just don't understand it and you don't know where to begin, I would love to help you guys. My Discord link to get started is below. I really want to help you. I was raised Catholic to do the right thing to help others my whole life. I'm not perfect. Nobody is. I've made lots of mistakes, but I've told myself when I achieve financial freedom to live the life I wanted to live, I would set myself out on a mission to help others, which is what I've been doing. You can see by the profits on the screen, all my students are making consistent, safe profits, growing their portfolios 50%, 100% in 3 or 4 months. I even have students that have over 2x in 2.5 months. If you want this kind of growth, you can use the link in the information box below. But don't take my word for it. Let's take a listen to what my student Shane had to say.
Started off with options. I knew nothing at all. Corey's program broke it down into very simple steps. Corey broke them down where it was nice and simple. And I was like, oh, okay, I totally understand that now.
How much are you up since the start of joining my program?
Oh, you know what? Hold on. I'll give you the exact number. Let me bring it up. On average, I was making about $2,200 a month day trading. That was average. In the very first month that I started actually selling options, it jumped up to $14K. And right now in December, I'm already up 6.4 thousand.
You went from day trading to my course and you were able to go from 2,200 to 14K.
Correct. And I'm up 165% right now.
If someone was trying to decide between my program or another Discord, what would your direct and short message to them be?
Corey's program will save you time and make you money. That's the bottom line right there.
What would you tell someone who is skeptical about learning from someone online like myself?
I bought into multiple different programs. From my experience, Corey's is the safest, very consistent and profitable.
How long did it take you to actually make back the cost of joining the Discord?
From the time I started trading, I made my money back in 2 weeks, 10 days. If you want to count the actual trading days, 10 days. And then I just looked at it and I was like, holy cow. I'm like, I just made $14,000 this month. I'm like, that's like crazy. And, just 1 month, it blew away, almost my entire year of day trading.
What did you start off with in my program? Total capital portfolio. And what are you at now with profits?
Started off with roughly 50,000. I had 25-ish already in stocks. And now I'm up to 75,000.
So you heard my student Shane had to say, if you want this to be your success story, use the link below. Let me unveil the secret to the stock market to you and help you make consistent gains. I look forward to seeing you very soon. So now let's take a look at NVIDIA is going to move sympathetically with AMD like they always do. AMD has earnings coming up on August 5th. It's not this week, but this is another stock that is likely to have a nice run this week. If data is good, it's going to run even more. I think Monday morning there's a potential for some pullback and then a run up. So possibly this notion right here for the week going into earnings and next week, but data this week is very important to look at. When we look at NVIDIA and AMD are very sympathetic to one another. We have earnings coming up a little bit later on beyond AMD's earnings on NVIDIA. If NVIDIA keeps running, AMD will be very strong as well. They kind of work off of each other. They're sympathetic to one another. They're both in the exact same space as competitors. So sometimes NVIDIA doesn't do so well. It might actually help AMD and vice versa. But looking at both of them, very strong growth. The tech sector is doing very well. I would not be looking to just enter blindly right now because then you'd be getting in at the top, and that is not a good thing. Looking at the SPY, there is a lot of support at 620. I told you guys, I told my Discord last summer, last fall, and in the early winter and spring of this year, I've been telling you over and over again that SPY would break 630 by the end of summer. It's already doing that. I told you guys Microsoft would hit 500. Did that. I told my Discord AMD would hit 160 by the end of summer or by going into the end of the year. It's already achieved that. We had the $125 leap calls for July 18th. That returned my Discord 1,200%. You can see that screenshot right there. 1,200% per leap. Insane. You could have turned $1,000 into $12,000. It's crazy. You could have turned $1,000 into $12,000. 3 contracts under $1,000, and you would have turned that into $12,000. Just one of the many strong trades in my Discord, along with SPY, likely to break 635 by end of summer and push higher by end of year as long as we get interest rate cuts and data is good, which it's looking like it is. If we see a pullback on the SPY, my target level right now is between 610 and 616. It's likely, though, that if the stock does pull back, it will stay in this range at 616 to 620. There's a lot of resistance there. So if it breaks through that at any point in time, I'd wait for some support wherever that may be in here, and then I would go below and sell puts at 603 or 605. But right now, selling put options, if you must, would be fairly strong around 620 for the week, or maybe even 615 because there's a lot of support in here. But this is all going to be very dependent on data and very dependent on if we get interest rate cuts. A lot of key fundamentals to keep in mind. Looking at SoFi, we have earnings on July 29th. It's coming up. A lot of strength on SoFi in the 21, even more strength at 2050, more strength at 20, and a lot of strength at 1850 to 19. I know a lot of people are saying, hey, should I get into SoFi? This move has already happened. So if you must attempt to get into SoFi, you should be selling put options and utilizing all of the premium on earnings, because this is one of the very few stocks that is almost guaranteed to beat earnings. Their CEO, Anthony Noto, is an absolute legend when it comes to meeting expectations. This man knows how to run a company, and he knows how to underpromise, overdeliver, which is the key to business success, which is psychology. If I promise you you're going to make 3,000 and you make 4,000, you are excited. If I promise you you're going to make 4,000 and you make 4,000, then it's okay. It's whatever. If I promise you you're going to make 6,000 and you make 4,000, you are extremely upset, yet you made the same money. What is the key factor and difference here? Psychology, expectations. By Anthony Noto, promising low numbers and delivering above every time has set the bar for trust and expectations, which means it's likely to continue, which means this stock is highly likely to stay the same or go up leading into earnings and even during earnings, and more likely to go up because of this sentiment. So the one stock, one of the very few, if not the only one, that I would even consider selling put options just rolling through earnings because of this. Look at all the previous earnings. They're all green. Anthony Noto does not miss. So what I would do is I would sell $19 put options this week going out to the middle to end of August. You'll end up getting a lot of premium. And if you get assigned, your average cost, even at 19, would end up being below 18, which means you'd be down here somewhere. And look where the stock is. So that's not too bad. You'd be buying right at the top of my AVP, which is another strategy, another indicator that I teach in my Discord to my mastermind and my elite students. This is something that you really want to take a look at. If you must, I know there's also the possibility you could miss the move. You could say, Corey, I could easily just miss this move. Well, if you believe this stock is going to run on earnings like I do, I really do. I believe it'll be up around 23, 24 going through earnings based on guidance and based on everything. I do really see this happening. Very high probability, not guaranteed, but high probability. If you believe this, then sell put options in August for $21 or even $22. And if you're to go in the money, like selling a 23 put and the stock was to run to 24, you will make insane money. However, I typically, on a stock like SoFi, would actually sell 23 or 24s, because as long as the stock stays the same or goes up, you're making money. If you sell a 25 or a 24 or even a $23 put on SoFi, and SoFi closes earnings at 22 or 22.50, sure, it didn't go above your strike. You're still in the money, but that put option is worth a lot less. You can buy it back for like 50% profits or let it get very close to expiration. It's worth $50 and you probably collected $500 for it. So if you take it all the way to earnings in this situation, right to expiration, you'd have a put option that you likely collected $300 on. You buy it back for $50. Remember, it doesn't matter how far out and how deep in the money a put option is. If you sell it and the stock goes up, you're in the green. So you could sell at the money or in the money put options depending on your sentiment on SoFi. I can't tell you what to do. Me personally, I do have some 23 puts for earnings. I do have some 20s. I have a lot of 19s. SoFi is one of the best stocks in the market, in my opinion. Looking at Palantir, another stock that just IDAGF when it comes to this market. It just does not. It really, truly does not. The stock market could be tanking and this stock's flying. This is a very, very risky stock, though, because it's all based on future guidance and speculation. Are they living up to this hype? Absolutely. Will they continue to? Most likely. Hopefully so. There's no guarantee. However, with everything in mind here, their price to earnings is insanely bad. Their price to sales is insanely bad. But I do believe in the stock's ability based on what they're doing, what they're showing us. It all lines up. It all looks good. Just understand the risk. If one thing goes wrong with Palantir, they miss one earnings or numbers get fugly for whatever reason, well, then the stock is likely to pull back to 129 and it could even pull back to 120. This is always a looming possibility. It only takes one little mistake. And if this mistake does happen and this stock does drop back anywhere in this range between 110 and 120, then I would be looking to add in that range, especially especially if it messes up and it drops down into the $80 range. If that ever happened, I'd be loading the boats because it's just essentially a strong plan, depending on, of course, what would have caused that hypothetically. If they missed earnings and future guidance was weaker and the stock dropped all the way down here, I would be selling tons of put options at 75 and 80 to get assigned, or I'd be buying shares because then I would know a year or two or maybe 3 out, this stock would go back to 140, and 80 to 140 is an insane return. So that's what I would be looking to do. But just to blindly get in and just buy shares at 153, I'd be very cautious. But I do want to point out one thing that I said this previous week in the stock market, and on one of my videos, I made a video on it. Go back and look at it. To buy Palantir by the 18th, we had a lot of dark pool data and a lot of hedge funds that were hedging calls in the 140 range and the 150 range to keep the stock in between. When all those options started getting closed out on Friday, the stock went above 150. There's a pretty real world possibility and a pretty strong, almost for sure probability at some point in the next week or two, this stock's just going to run up even more. But it's not guaranteed, and I'm not trying to FOMO you because this is rough stock at its current valuation. So be very, very cautious with Palantir. Just as a reminder, if you guys want to see those 5 stocks that are likely to explode, put a comment below. And if you also want to see a video on Fidelity's new Active Trader Pro beta update, put that comment below and I'll make that video for you guys as well. Now comes the moment of truth. I told you I would show you how to gauge the market Sunday night in order to see what is almost surely to happen Monday morning. And I'm going to show you guys exactly how we are going to do this. You're going to look up the MES, which is the Micro Mini S&P 500, and you're going to see this opens Sunday night, 6 p.m. Eastern, 3 p.m. Pacific. And you're going to see either the stock is going to go up or down, it's going to gap, whatever it does. It's very indicative of what's going to happen, likelihood Monday morning, because the stock market in the overnight hours gets pretty weird and wild. And then it opens up in China and Japan in our overnight hours in the United States. And then it opens up in Europe and then finally over here in the United States. So understand that anytime you see the S&P minis gap up like this, is likely we're going to have a bullish day on Monday and for the week. If it ends up gapping down, then we could potentially have some very bearish sentiment Monday morning and some dropping going on leading into data. We have a strong market this week. Very strong because of what happened last week, the week before, and data, but there is expectations coming up in earnings. So it's likely that when this opens, it's going to consolidate, maybe even have some strength and go up. It could go down, it really could, but it's more likely that this is going to consolidate when it opens up tomorrow and maybe even jump up just a little bit, showing some strength going into Monday because we don't have any data on Monday. But then Monday after a run, it might pull back a little bit going into Tuesday like it always does, especially because Jerome Powell's speaking. Keep an eye on this because it's very indicative of what's happening in the market Monday. If you look here on the 1 hour chart, you will see we're going to go back here and I'm going to show you something very specific on May 12th, which was back here, I believe. There it is. There we go. Sunday, May 12th, you can see right there, or Sunday, May 11th, going into Monday, it gapped up. Look at that nice gap up. In the overnight hours, Sunday, May 11th, gapped all the way up on the mini S&P. If we go over to the SPY, we go back to May 11th, look at that gap right there. SPY gapped up. Let's go look at Tesla. Let's go back and look at May 11th. There you go. May 11th, big gap right here. See that? So you can see that stocks are gapping based on and moving based on the micro mini. So whatever this micro mini does tomorrow night at 6 p.m. going to the overnight hours into Monday morning, this will show you what's likely to transpire into Monday and Tuesday based on the world's belief and the world's sentiment on the American stock market. And then as you progress in the overnight hours into the morning on the S&P, it becomes more reliant on nationwide investors here in the United States. But you want to look at it really between 6 p.m. Eastern, 3 p.m. Pacific, going through to around 5 a.m. Eastern, 2 a.m. Pacific. This 8 to 10 hour window from 6 p.m. to 4 a.m. is really going to show you what the sentiment is for Monday morning in the stock market by utilizing the S&P mini micro future contracts. So this is a very powerful way to gauge the market. It's the cheat code to the market, in my opinion, on the weekend. If all this stuff is confusing you and you don't know where to begin, I totally understand. Don't hesitate. Act now. Link to get started in Discord is below in the information box. I look forward to helping you in the stock market and grow your portfolio like my students and the profits you see on the screen. One love, fam. I'll see you in the Discord real soon and on the next video right here on YouTube. Take care of yourselves.